This is training session 3, continuation of the series which we have started. And in this session, as we were talking in the last session, we have touched upon certain points of this one, 208, and there would be 2 sessions dedicated to this one, 10 minutes each, so that everyone should get idea of in a shorter span of time how this indicators and how this tool can be used and what are its benefits. So like I mentioned earlier, in the video, this was a line which was drawn, and this was a level especially corresponding to this one. Gold came back to this particular level. There was a flat line. That means it suggested. I'm talking about in version, talking in terms of version 203, 213. So this is sideways detecting. Like this indicator helps us in identifying sideways market and trending, and then it started trending and it came back and then move upwards. And now we are expecting some degree of this kind of price behavior, and then price coming back and then going upwards. If not, then it will go downwards, and this is what we are expecting: a price turning sideways or sinking below. So now let's see what happens, what price does, and what gold has to offer next week. So now coming back to our, would say, to not like this is one of often, and all my trading decisions are purely based on this one. Like for example, just for sake of discussion, if I'm applying to not 213. So everybody know this is like, first of all, many people ask me why we have so many indicators. Why do you make so many indicators? Because my friend, there are many traders with having many different kind of intellect, many different kind of understanding, many different kind of time availability, and many different kind of exposure to the market and patience as well as capital. So I'm a full-time trader, trainer, technical analyst. So I have to offer solution to all the people. That means I want people to earn money irrespective of their limitations or their gray areas or their which they can take leverage of. So based on that, I have made this different tools, which I feel over the period of my 17, 18 years of experience watching market in a different based on through the glasses of Wyckoff and through my own experience. I'm a statistician, like I'm a mathematical guy. So I've made different many formulas based on stat and maths. So having said that, just to give you a glimpse of what I am, or just a fair idea of what I am. So now, for example, I want to get into why I use this thing and why I tell everyone, every student of mine who are in my who were in my old trading school, old method system, like which David and Gary and I and other students of those era used to trade based on. Before I made this Wyckoff indicator based on the basic teaching of Wyckoff. So this tool is something which is very effective and efficient. If you know once how to use this tool, you would be using multiple tools on your main panel, but this tool would be there because it gives you waves and it gives you the pressure and the amount of demand available in the market in terms of particular waves. So here we are talking about waves. Waves is not it's not something which is only related to Elliott. Elliott wave is something different. This is Wyckoff wave because Wyckoff said, and I quote, whenever there is a buying wave begins to shorten in time and distance, or selling wave started to increase in time and distance, wait, look for a trend change opportunity. So this indicator is based on that particular statement. So David Weiss, he incorporated it factor because distance and time we cannot measure. At his time it was available, but in this era, time and distance is something which is relative and it has to be incorporated in different manner. So time as that we can use, we can compensate it with volume and other things. So I'll not get into the main hardcore working of it because it is not the purpose of this session. The main purpose of this session is to use how to use it. It whenever we see a green pyramid, let me once again, let me hide background color price also. Okay, the chart we are observing this on is 5-minute chart of XAUUSD gold spot. So here you can see this red pyramid, green pyramid, some sort of single red, uh, uh, green histogram, and then green or red histograms. These are visible over here. So what are this kind of thing? These are, if there is green histogram, so green histogram refers demand, red histogram refers supply. So when the price is coming down, it assesses the supply in context of close. And when price is going upwards, it assesses the demand, or it shows the demand, whether this demand is high or whether demand is low when the price is approaching upwards. So, and same goes with this one. So when we consider a pullback trading opportunity, like for example, due to some reason, I'll hide this one. So I'll be in a better position to explain. So if, for example, here on, like if in this particular portion, you can see there was only supply. After this particular portion where the demand started coming in, whenever we are going downward, there is supply. So if I make a range at this particular point, this is what a breakout happened, and then after that I can see some degree of like for example, it is somewhere here or might be here. So if I'm planning to buy here, I want to see, is the supply being eaten away or exhausted, or either is there any evidence of fresh demand to take this market upwards? And if that is the case, then I would enter at this particular point. Given the point, I would look into different different confirmations from different other confirmations apart from this before entering into a trade. You're getting my point? So this is how we have to analyze. And once, like for example, if from this particular point downward price progression started, so if downward price progression started, I want to see if there is a supply in it. There was supply, and look at the amount of pullback. At the pullback, the volume was low. That means this pullback is not going to take this market upwards, at least at this particular point, because we have already, as we are approaching upwards, volume is the upwards stream. We consider steam volume as a stream or an agent of which or to be like in a layman's language, you can consider this demand or this volume bars to be the fuel which drives the market, drives your vehicle forward, and it gives you the push. That means at this particular point, there is shortening of thrust, and moreover, fuel is getting lesser and lesser. That means now there is no fuel to take this market upwards. Now that means price is about to go downwards, and this was a correction which has taken place. And as we are approaching downwards, you can see the price, the volume, the supply volume is decreasing. Now you can see within this price, like for just to simplify, within this whole price action, starting from this particular point to this particular point, you can see there is minuscule demand, but supply is greater. So the supply would start coming in from this particular point. So at this particular point, you are not sure whether this market is going to go downwards or not, but you have a background of this one. So we take background, or we take recent demand or supply histogram into consideration for assessing what is going to happen. And if there is momentum following along with this one, then definitely it is a market which is going to go downwards. And after that, you can see it all shrink, and all of a sudden we see new demand pumping in. at this particular point. Now, this is the highest demand within this price action. Maybe give or take 1 hour or half an hour, 1 hour price progression, for example. This might be 10 or 15 candles, give or take. And then if you see here, we have a demand, then a pullback, and then upshift events. This is a perfect spring, a perfect spring. Like I'll not get into spring because that is a different, altogether different. It works in accordance to this one. So I hope you enjoy this session. And moreover, there is one thing which is oversold and overbought. Overbought means it is the pinnacle of buying. Oversold means there is the pinnacle of selling. That means this is the extreme level which has been reached by the market. When it comes to demand, this is the extreme demand level, this is the extreme supply level. So now either ways, price has a tendency when these levels are achieved or reached, price has a tendency to go sideways either ways, or either it will break down instantly and it will test and go down. So these are the areas wherein we should be very active. And moreover, if you want to trade it with 213 or 206, it's up to you, no problem. But you have to have this tool in your arsenal, because this is one of the best tool which I have seen so far, and which don't have any other substitute. If you know it well, if you understand it, then nothing like it. But there are many few practice with this tool. This tool is one of my favorite tool, and I always apply it on my chart. So in this version 4, because I'm already done with the two sessions. So please watch this. I've been transferred and communicated crucial information manner, like Euro USD. We'll hide this thing because we want to see this thing what it is doing. Like for Euro USD also, the market was flat, and then after that, price started moving upwards. So this is a very 213 is one of the best tool for staying away from sideways market. It is one of the best tools. And I really appreciate a lot. Alhamdulillah, Allah subhanahu wa ta'ala has blessed me with something wherein I can teach people and I can help people grow and earn a consistent money if they have the discipline. So having said that, now here we have a demand coming in. You can see demand, 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 demand. We see price progressed. We see supply, supply, supply. Price came down. As we approach at this particular level, which was a wonderful level at this particular position, we see supply is persistent. It is there, but demand is not increasing. So either way, when supply is getting exhausted, or either demand is pitching to come in, or is about to come in. Like for example, this was the last demand supply bar. This manuscript, this red line I'm talking about, and you can see this is how you have to read the market. As we are approaching downward, that means supply is getting weaker, and this move is going to end. And if we apply shorting on thrust and other activities with it, then we can catch this much of move. So this is what happened in Euro USD. And one more market I have to look, but if my one second, let me. That is, I think. I think it's getting refreshed. Let it be. We'll end this particular point because I think trading is facing some issues. So watch this video again and again. And tomorrow I'll be uploading some more videos. I planned 2 videos today, but due to some uh, other work, I was not able to make. I was able to record 1 video. So please watch this video again and again. And training session 4 would be uploaded tomorrow, and screen up thrust and other things would be uploaded for that Malaysian guy. Thank you.